Hello, hello. How's it going? You guys should be able to see the poll. So get that out of the way. Let me actually get to that. So nice place for me to start. Hmm. So Trump came in last night once we finished the live session. He did come out and say that he's now looking at putting in tariffs. And the rates that he went on were pretty scary. So a lot of people got a bit scared, obviously, because they weren't really expecting that to come through. But the administration right now is swinging back to an aggressive pursuit of tariffs while markets are remaining sanguine about the future. So the market's not really giving that much of a damn about it. But what the market does care about is the fact that if there is a large amount of tariffs that continue and they continue on to the weeks henceforth and the month after that, you can actually start to see things actually getting worse. Now, to that point, it would look like the trouble at this moment is without market pain, the fact that the taco trade won't really come to fruition. If that does happen, that could be a sign of worry, but at the moment, it doesn't look that way. Anyways, let's go over a few things. Let's go check what's happening with stocks, what's happening currently. You do see the futures in the US up a bit. I decided to start this live a little bit sooner because the market doesn't seem to be having anything great till the time it opens. So we'll keep going on this. If something comes through, we'll talk about it. But at the moment, it looks like 22,738 is where the market's going to be opening. That's about 100 points up on the NASDAQ. So yesterday's market close for the Dow was down by about 422 points for the Dow. You were down a lot lower for the Russell and the S&P. Both of them were down. Russell was down about 1.55%. The S&P was down about 0.8%. So you had a bad day after a really, really long time. Now, today there is some form of a recovery that is happening in the market. You are seeing the US 100 up about exactly 100 points. So let's see if that continues. At this moment, it doesn't look like that strength would continue unless the administration decides to make a pivot into what they're trying to achieve. So let's go over a few things. Let's see what exactly happened yesterday, right? So Trump did one of the few things. He did extend the timeline. He did say that the July 9th timeline is now being shifted to an August 1st. And because of that August 1st change, Trump was able to come in and this is what we were saying, right? For everyone that's new here, go ahead, subscribe, and make sure to like and go ahead and vote as well. But what we were saying exactly a few weeks back was the same concept that Trump would extend this deadline. You would get a tariff deadline that moves maybe from July to August. And that did come through. Now you get a July 9th moving to an August 1st deadline, right? That did scare the markets because the markets was expecting that. It was pretty much already in the price. What started affecting the markets was the rates that were being put now on these other countries. Look at Thailand, look at Indonesia, look at Laos, look at Myanmar, all of these. Even though they're not big trading nations, there is some form of a scare in the market that you might come in to see a similar move that you saw on April 2nd, maybe not as aggressive as Trump has been saying, but as to a certain extent, it does look like it can get weak on the underlying phase. Now, if that does happen, the markets would correct. At the moment, it doesn't look that way, right? You're looking at Tesla as well, that I did come out and see was up about 1.15% for the pretty much the futures, right? It was down a 6.79, but it's still up 1.1%. So that is a substantial move that you have seen on Tesla. In more important news, I would have genuinely expected the volatility index, the VIX, on the market to actually head higher. That not happening and staying below 17 makes me more bullish on the markets in the short term. What I do believe is that we might enter a phase where it looks like the market could pretty much stagnate before heading higher. Now, I'm not of the opinion that the market is looking weak by any measure, but I am of the opinion that the market does look pretty there are some form of weak points that the market is currently seeing, and that is something that I can witness at all points of time. So what did he do? He extended the July 9th deadline to August 1st, right? Now, that deadline pretty much spooked global markets, and it's also led to speculation on trade negotiations. The administration had come out and said that they were looking at 90 deals in 90 days. They were looking at a lot of these deals going through the market. A lot of them would just need a signature from Trump and then it's enough. And, the deal goes through and markets would rally. And a lot of that has been baked into the price. Now, the market has already priced into this concept that a lot of the trade deals are just a signature away. The fact that we had a lot of countries that have now been tariffed at high rates. Now, remember, from the reciprocal tariff rates on the day of April 2nd, when you had Liberation Day and everything after that, the rates that have currently stayed are pretty similar to what they were earlier. So you are looking at a few percentage points that have been reduced. So countries that were being taxed 44 are now being taxed 40. Countries that were being taxed 25, look at Japan, look at South Korea, they're still being taxed at those rates. That obviously is going to come on August 1st. Now, Trump also came out and said that he does look at this concept that at the moment it looks like he is firm on August 1st, but he is not 100% firm, is what he said. What that means is he's open to negotiations. He wants these guys to come on the table and negotiate in prices. Whether that happens, whether that doesn't happen, is something to basically wonder about, to look at whether it actually can. All right. That being said, let's actually go in and have a look and see what the rates were. Right. Let me actually see if there's any news. So there was an NFIB report that is coming out, and that's supposed to be telling us about the optimism in June. So June's optimism has held steady at 98.6, and it was previously at 98.8. Taxes remain the number one problem, but considering that the big beautiful bill got passed, it is now looking like the tax rates are going to be lower, and that is pretty much per se. For most people that are earning in America, tax rates have been reduced and you are getting a lot more money to be kept with you. Now, by a lot more, I don't mean it's half of the money that you were going to be paying in taxes. There is some amount of money that you are saving. That money could necessarily go into the stock market because that's the thing that's booming at this moment. This is the same thing that we saw during COVID. During COVID, a lot of the tax money that was given out, a lot of the funding that was given out, a lot of the unemployment benefits that were given out, right? During 2020, during the pandemic, a lot of that money poured into equities. That is what I am believing, that it does look like that is going to be the scenario that is going to come in, right? Hiring plans have ticked up. Remember, the employment market has pretty much come at a standstill where you're not losing your job, but you're not able to get a job. So the fact that the NFIB report does come and say hiring plans have ticked up, there is not a hiring increase, but plans have ticked up, means it's potentially looking like once the big beautiful bill is out, that's already done. Now that the tariff deadline has been extended, everyone is able to understand the game that is currently being played. If that is the case, then it does also look like you will certainly see prices head up higher and higher in equities, because you are going to see two things that I do believe will happen, which will make prices go up. One clearly is the real estate market taking a turn because the Fed might cut rates. The second, you should be able to see a scenario where now you are able to get real estate and construction picking up, not only housing in per se, but if the real estate sector picks up, you will see jobs being increased, hiring being increased. If that happens, the unemployment rate heads lower. Even if it stays at 4, these are great numbers. 4.1 is what it's currently at. Everyone is expecting a 4.3, a rise of 4.2 to 4.3. It actually came in at 4.1. So that's actually a benefit that's currently been going. The only NFIB thing that's currently looking bad was expectations for a better economy fell, and two capex plans hit their lowest since June 2020. So that is something that is worrisome. But see, these are all parts of a puzzle that you take together in order to decide on what your view for the markets are going ahead. You don't take it and buy and sell decisions just based on an NFIB report or a jobs data or an unemployment rate. You look at a few things, you figure it out, you see what's currently happening, and then you move forward, right? You guys should be able to see a poll out there, so go ahead and vote. The question is, will Trump's new tariffs hurt stocks or create a buying dip? If you have four options, you get a big dip incoming, you get a short dip and then a recovery, or you get a great time to buy, or do you get no major impact, right? We have more people believing that there's a big drop coming. So let's see what happens about that. My belief would still be that it's a good time to buy, but possibly you could see a short dip, right? That's quite likely. Anyways, let me go ahead, let me look for some of the news and then we can talk about that. So the tariffs, whether they stick at the 40%, 25%, I don't really expect that to happen. I actually do expect that there would be a scenario where you could see these prices actually on stocks, you could see these prices actually get adjusted, as well as a lot of these tariffs that have been going on at this moment, a lot of them could most likely not stick. Some of these countries, they're going to send their representatives, they're going to be telling, because they're going to face a lot of pressure from within, wherein they're going to be getting a lot of people that are coming in and saying, hey, that doesn't look likely that, it's something that everybody should be worrying about. And a lot of people, like I know one of these, right? In Indonesia, the Palm Association of the guys who sell palm oil there have basically come out and said that, hey, listen, if you're going to be selling so much amount of palm oil to the US, it's basically going to take a 15% hit for us because these new tariff rates are way too high for us and we can't deal with that. Now, if that's the case, that's going to make things look worse, right? So I don't think they're going to stick, but I do believe they are a negotiating tactic. How do they turn out to be a negotiation tactic is purely that America wants a few more things before they can sign a deal with all these countries. They basically want more time. The India deal is going to go through, the Japanese deal and South Korean deal pretty much is in a limbo, but I think the India and the EU deal would go through and that can take the market higher. Quite likely that that is the scenario that currently the market is believing and is what it will end up in, right? The markets in 2018 to 2019, when the first tariffs were put in, they actually did see the fact that inflation was non-existent at that moment. But do remember that inflation back then and inflation today has two different stories altogether. We went through a pandemic in 2020, and that's how we've ended up here. In 2018-19, when you had the tariffs kicking through, you basically had something where there was no inflation because the Chinese were still sending all of their products globally, and the fact that they kept sending their products globally into America was a deflationary event. So you kept seeing inflation heading lower and lower. Now, if it's Japan, South Korea, and all of these places, you will see some things start affecting the auto sector largely. Now, necessarily that could benefit Tesla, right? Even though that is against what most people believe and against what most people are looking at, considering the fact that Elon and Trump have not been able to get along. So, this could actually be a boost for them. If this turns out the way I expect it to, Tesla could actually do pretty well if these tariffs actually stick. Now, just a negotiating tactic at this moment, but you are seeing that there could potentially be a benefit to Tesla in this whole game, right? Uh, let's look at some of the other stocks that are currently. That's basically the brief on the tariff scenario that's currently going on. You are seeing Nvidia is up about 0.76%, so that's actually been heading higher as well. So most of the stocks actually for today are up. It's pretty much a flat day. It's about 100 points up on the Nasdaq, which is like nothing, about half a percent. Till the time we are not able to take out yesterday's high of 822, 822 on the Nasdaq, you're not going to see a large recovery into the price. You're not going to see a large move higher. My bet is by the end of the week or before that, unless you have some new tariff nonsense coming through, more than likely you're going to be seeing the market heading high. More than likely you're going to see a new high coming through again. We've been making new highs for the past week, and I do believe that in the ensuing weeks as well, you are going to start seeing the markets head higher. Right. Now, let's get on to a few more things. Let's look at what Bitcoin has also been going up 108,000. So there is some form of a movement, but it's been very, very choppy. It's been just trading within that range and literally nothing's been happening there. Right. The dollar index, on the other hand, is something that I do want to talk about because the dollar index has usually been staying steady and falling. Right. For the past 8 days since July began, the dollar index has begun to move up. Now, That is a good sign because what that means is if the dollar index is picking up, there is some form of dollar buying that's coming in. And to some extent, even if it can get back to its 100 levels, it'll be way off its highs, but it is some sign that the treasury yields can be held at this price. My expectation is the way the treasury yields, the 10-year treasury yield currently is at, it's more than likely that we end the year at the same price. We will go between 4.25 and 4.75. At 4.25, equities go higher. At 4.75, everybody's going to be screaming, saying it's the end of the world, and 5% bond yields will kill all of us. Not really the case. Stop worrying about it so much. Where year to date, the bond yield, if I have to tell you, has literally not moved. Now, since the start of July, we have gone from 4.2 all the way to 4.4. So it is the volatility in the bond yield that matters more than the issue about the actual price on the bond. Now, 4.8 was our high. We made a high around 22nd of May at 4.6. Now we're at 4.2. So we're trading in that range. And this is what we've been saying in every live, that it does look like 4.2 and 4.75 is going to be the range. Anyways, everyone that's new here, go ahead, say hi, and also type in and put in the poll, select whatever you want about the question that I have there, which is basically, will Trump's new tariff hurt stocks or create a buying tape? You have four choices about a big drop incoming, short dip recovery, or you have a great time to buy, or no major impact. Go ahead and make your choice. And I will be grateful if you can go ahead and subscribe as well. Okay, let's go ahead. Let's look at some of the news that's actually coming out. Do we have anything? We are going to eventually get to the state where we are going to be talking about the tariffs rate that he has come in and put. And then we can talk about that. Jimmy says, hi, how are you doing, Jimmy? How's it going? Nice to see you in the chat. What do you think is going to happen about this whole tariff stuff? Right, the new ones. Do you think the market's going to go lower or higher? My bet is still that the markets are going to go higher. It does look that way at this moment. Anyways, go ahead and vote. Let me know what you do think. Trying to see how that plays out. Barclays did come in and maintain an equal weight on SoFi, and SoFi has actually been on a rally. I do remember it's being about an $8-9 stock, somewhere around the previous during the Liberation Day. So that's at about 8.6. It's actually going to be hitting $20 now. It's at about 19.71, and you're seeing another 2.44% move. It's actually been on an absolute tear, right? My bet is if you can reach and close about 23 and 24 on this, you could very well move all the way up to 35. Does look likely that that's going to be the case in the next year, a year and a half, and that's great returns, right? 75%, 80% returns in like a year and a half. No one's complaining. SoFi does look pretty good even on the chart. It does look like it is going to head a lot higher, but anyways, let's see what happens. Apparently, the news is that 75% of the United States is estimated to have access to an Amazon Prime account. Now, that's a lot of people, man. Yeah, that's the fun fact. There's been a lot of Prime days actually going on. The fact that you've been having Prime Day, then you've been having fall and spring sales, you've been having more and more amount of Prime days because they're trying to make more and more money. There's been about in 2025 already about 4 days within the Prime Days sales, which is good. If the consumer spends money, you're eventually going to be making more money as an economy as well, right? Let's see how the BNPL story works out with Amazon Prime. That's actually going to be worth figuring that out. There's news today that Apple loses its top AI model executive to Meta's hiring spree. So Meta's been buying basically Zuck's building out his super intelligence like he's building some military top level team. Everyone from the top companies of OpenAI and now Apple as well have jumped ship and gone to Meta. He's throwing about $100 million checks to each of these guys, and it's crazy to watch this happen. But that's how he is, right? I mean, it's the game the way it's played. Now you can either play it or you can cry about it. The choice is yours. We're about an hour away exactly from the market open. So I'm just going to go over a few of these. Yeah, the 10-year yield is back above 4.4. So that's actually a sign that there has been a big move of 20 basis points in the past week and a half. Now that is, it's not worrisome when the rate is above 4.4 or 4.5. It's worrisome when the move is sudden. That is how you look at rates, right? Uh, let's go ahead. Let's look at a few more things. Apple's expected to release later this year an iPhone 17, a 17 Air, a Pro, and a Pro Max. You're looking at Apple Watches coming out. You're looking at an AirPods Pro. Okay, whatever. So Stephen Moran, the guy who basically works with President Trump to get a lot of the trade deals done, has come out and said that we could see more trade deals by the end of the week. I do think the Indian trade deal will go through by then. You might even have a small country like Cambodia or something like that go through as well. I'm not sure if Europe might go through, the whole European Union. That might actually take a lot longer than people expect. But let's see. Never say never when it comes to Trump and trade deals, right? Hi, how's it going, Angel? How's it been? What is going on at this moment? So that is something that I'm currently looking at when it comes to trades that are being placed. I'm not really at this moment pretty sanguine about the markets in general, because I do believe that you can look at prices actually head. I don't know. I mean, they could just stay the way they are at this moment. You don't necessarily need to watch them go crazy. But remember, right? In bull markets, markets can be overpriced and higher for way longer than you can imagine. So you could very well see prices keep heading higher. You could very well see prices continuously going up and up. Now, whether that continues happening or no, it's something that time will tell, but keep a watch at it. What I still do expect is markets to head higher slowly but steadily. Some form of pullback is necessary at this moment. So keep that in mind, because it does look like markets will uh, head a bit lower before they do head higher. Consumer demand appears to be weakening. So, according to NFIB, more small firms reporting that their single most important problem is poor sales. So, it's up to about 10% in June. So, consumer demand weakening would actually be a worse sign for the market in the future. A fresh cycle high, weak sales, uh, and layoffs are looking like they will happen next. Now, whether that actually happens or no, time will tell. But at this moment, it does look like demand is weakening. That can all be solved by Fed rate cuts. If you do get Fed rate cuts and you do see the market heading, accepting the fact that the bond yields do head lower, the 2-year yield or the 10-year yield starts heading lower, a lot of people will refinance, a lot of people will go out on mortgages and make, basically the mortgage companies like Rocket and all of these guys could make a lot of money if you see a refinancing boom. I'm not sure if that is going to be seen ASAP, but it could shortly be seen. Okay. United States ocean imports from China have dropped by 30% YOY in June. So US container imports have fallen from June 2024 levels. Okay, that's not really that much to worry about. Considering the fact that you have a 30% tariff, I would have expected it to fall by double digits. The fact that it's fallen only by 3.5 is not really that much of a worry. Uh, India reportedly plans to buy about 10% of its cooking gas from the US starting in 2026 as part of a broader strategy to reduce its trade deficit with the US. Hmm. I don't know. There's been so much bad news about Apple at this moment that it's actually looks like it's actually going to be worth a trade, right? At some point of time, it does look like Apple could actually be worth looking into. Quite possibly, it could be one that actually heads back to its all-time high of 260. Who knows? But the question is, what would the triggers be in order for it to reach there? In my viewpoint, the triggers purely could be something like if they buy Perplexity, they buy another. I don't think they'll be able to buy Anthropic because Amazon would stop that. Maybe OpenAI to some extent could work through in their for-profit division. Sam Altman coming into Apple on the board. Looks likely that Sam Altman could even become the CEO. I'm not saying that it's going to happen. It's very, very far-fetched, but who knows? But let's see. It's actually going to be worth figuring out what exactly happens with Apple, just because of the size of the company, the amount of billions of dollars in cash they sit on, and how they actually wonder that this is going to be happening, right? At the moment, like even Kramer was saying that it does look like the markets have taken the strength in the economy, strength in the markets are real. It's there's also earning season that's coming up, so which I do believe is going to be a very good earning season. So you will see the markets actually doing better. There'll be a lot more stocks outperforming, making the advanced decline ratio hit a new high again. Post that, you will also see more than likely that you will see a lot of these positions in earnings spike higher, taking the index higher, and you might even see 6,500 this earnings season in this quarter. Quite likely that that could also turn around and come through. Gold is currently steady at 3330, so it's pretty much reflecting the safe haven demand that's currently going on. Silver's been flat. They're basically telling us a story about what's currently going on. So markets are not expecting inflation to spike. There is no geopolitical risk. So you are seeing these prices actually stay steady or head lower. You're not seeing them spike consistently and move higher, right? A question that I had the other day was people asking if they should retail investors add gold as a hedge. I wouldn't expect people to be doing that because that necessarily might not be the best way of investment. Gold, to a certain extent, is great, but it doesn't beat equity returns, even though for the current year it has done pretty well. So don't write that off. I would still expect just go buy great quality companies and you would over time compound way better than gold. That's just my view. I don't hold any gold, so maybe that's the reason why. Okay, let me just go see. I think we were a bit overextended on the Nasdaq, the S&P. Maybe not the S&P, but at least the Nasdaq, right? We went all the way on the Nasdaq 100 stocks above their 200-day moving average. We moved all the way from 20.65 all the way up to like 68, right? That's a big, huge move, one-way move all the way up. Now, there's some form of stuff that you are going to look at and looks like markets could head a bit lower, right? So since 1950, when a quarter's return exceeds 10%, the next quarter typically performs better than average, gaining 4.7% on average compared to the overall average of 2.3%. So what that looks like is that the current quarter, which I do expect, that the markets could actually have another 4% move. And if that does happen, I think you might be able to get to 6,400, 6,450, 6,500 even on the S&P 500. And that could actually make markets move. I would expect the markets to still head higher. 64, 6,500 looks pretty likely. The Fed CPI now forecast model still shows no real inflation concerns through July. So, what are we looking at here? We still expect CPI and inflation to stay steady, so you're not really seeing the markets go crazy at this moment. it does look like markets are staying where they are, at least from an inflation perspective. They're not expecting inflation to get crazy. Hey, this was actually fascinating. I would have expected this though, but 75% of the United States is estimated to have access to Amazon Prime. Right? That's a lot of people that continuously pay every month, right? That's the reason why it's. What is Amazon at? I'm pretty sure it's more than 2.5 trillion now, 2.37 trillion. Yeah, quite likely we're going to be breaking that 250. Let's actually go check how much can you make if you trade leaps on Amazon. Right. If I expect a 250 on Amazon to come through this year, and if I want to be buying pretty much in the money, so do we actually get any money out of this? Nah. Well, let's see. Let's say you put in some amount of money and 225 heads to 260. You're gonna gain anything out of this? About 250 on a 12-13% stock return. Yeah, not really too much, but let's say we go out a bit in time, 240. Yeah, not too much. I think the market is expecting Amazon to do pretty well. So that's pretty much discounted into the price. More trade deals by the end of the week. Like I said, I actually do believe the Indian trade deal will go through by the end of the week. The rest of them, I'm not really sure about. Might take a bit longer. By the end of this month, I think even the EU, right, the European Union, they might also come through and that might get done. So quite likely that that happens as well. A lot of people I have agreeing with the fact that Trump's new tariffs hurt stocks, but they, according to a lot of people, a big drop is going to be incoming. I don't really believe that. I don't think we're going to be seeing a big drop. Maybe because I'm 100% invested. Who knows? Okay, let's see. We got some more stuff that's going on. Oh, we should be able to get to a page where I have all of the data as well that comes in for the tariffs that have been going on at this moment. The dollar has been having good, pretty much good news. Right, it's been heading higher. It has been holding steady. It's not crashing, neither is it going up considerably, but it is decent. It's not too bad. Malaysian Trade Ministry clarifies US imposed levy of 25% is not on top of the 10% baseline tariff. Okay. But I think they're going to negotiate that and get that lower as well. Let's see. Porsche warns of a tougher second half. Their sales deliveries fell 6%. Okay. Hmm. So Google's Waymo has actually started testing in New York City. And the fact that Tesla has actually been having a pretty bad day does look now that the 6% drop that Tesla had seen pretty much led Uber to hit a new high. In Uber went in to go and hit almost 97, right? Uber's been breaking out pretty much all the way from 62 in April. It's now at about 90. So it's more than a 50, 55, 60% return on Uber. Now that's good money that Uber has seen for a $200 billion business, right? They still trade at a price to earnings of just 16.05 and they are just starting to make money. So quite likely that this company actually starts making a lot of money and maybe the stock goes to 120, 140 as well. I wouldn't write that off for Uber. It is quite likely. Yeah, let me just get a charger for my phone. Yup. Now we're good. At least my phone's charging now. Okay, let's go ahead. Let's see some of the more news that's currently going on. Trump promises more weapons for Ukraine and criticizes Putin. So that war is not stopping. I guess that's going to continue for a while. No reason why it's going to be stopping at all, but it is what it is. I don't know who benefits in that. I'm just not able to understand that whole game, what's going on there. But this is the one that I was trying to tell you. Indonesia's Palm Oil Association projects a sharp 15 to 20% decline in palm oil export volumes to the US, citing the impact of newly imposed tariffs as a major setback for the industry. So I don't know, man. I actually do think that these guys are eventually going to cave in and just agree to whatever is currently happening. I'm just not of the view that you're going to see these tariff rates of 25, 30, 35% sticky. I don't think it's going to happen. Let's see. Israel confirms 5 soldiers killed. So that's been pretty bad because that's had some form of bad news coming in there. But anyways, make sure you vote. Make sure you go ahead, subscribe, and like the video. But there is a poll out there, so go and vote. I'm trying to see if we can get to 10 votes, and I want to get to 200 subs. So be a part of this. Go ahead and vote. Just do your bit. Okay, so Kevin Walsh, who's one of the guys at the Fed who does look like he is going to be the one who's coming into the Fed as possibly one of the Fed chairs, or pretty much the head of the Fed at this moment. He says you can materially have lower interest rates if the Fed would shrink a couple $1 trillion off the balance sheet, just a couple trillion. We're in a housing recession right now, which I completely agree with. Construction and housing is pretty much at a standstill. It does look like that needs to change, right? We got Dikshant in the house. Nice to see you, buddy. He says, I agree, the price is still acting strong. I do believe you're talking about Uber. And yeah, that was the last stock that I was talking about. I think 100, 120 is pretty likely, right? I don't really think it's going to have any. The worse it gets for Elon, the better it gets for Uber. It's just plain and simple at this moment. The math of the business and the fundamentals and all really doesn't matter at this moment. It's just a game of how bad Elon gets with his daddy and how good it gets for Uber as a reverse trade. So that's quite likely. I actually do think this one's going to fly off the roof. It looks quite likely. I mean, I have no investments in Uber, but just my view is at this moment, 103, 105 is not too far. Could be seen this quarter, maybe even this month, if the market gods are happy with us. What do you think, Dikshan? Let me just try see. Oh, across strong stocks, man. That too. You're right. Uber being one of them. Yep, true. One of the stocks that I was looking at, I actually, you know what, my mind's a little weirded out. So I actually think Apple might be one of the best performers in the next 6 months. I could be completely wrong. I have no investments in Apple, so uh, for me, it's just viewing everything from a glass half full for Apple. But I actually think Apple could be one of those plays where you could see prices moving all the way up to 240, 250, even 260 this year. I think that the more people that write Uber off, I think there would be more people that would stay away. Sorry, more people that write Apple off would basically be people that believe that Apple can never recover. Yeah, it does trade at about 33 times earnings, but I have a few thought processes here. One about, will Apple actually buy out Perplexity? Maybe sign a deal with Anthropic, but Amazon's a big shareholder of Anthropic, so I don't know how that works. Maybe sign a big deal with OpenAI. ChatGPT could become mainstay on Apple. I have a feeling that the easiest way for this to actually work is if John Ivey and Sam Altman are thinking of getting together and they are together and creating hardware, what better company to partner with than Apple when it comes to hardware? Make use of Apple security, make use of Apple's users, and give them the platform to basically build with OpenAI's tech. And what better successor to Apple than a visionary like Sam Altman with the hardware genius of John Ivey? Just saying. This is how my mind thinks, but it's not the way the stocks want to work. But I think that's pretty much. I don't know if that's going to fit in pretty well as a story. It looks nice, but I don't really think it'll happen. Is because Microsoft has a big stake in OpenAI, so I don't know how that's going to float. But I do believe that that is exactly one of the reasons why Sam Altman wants to distance himself from Microsoft. So further he distances himself from Microsoft through the profit, not for profit. I don't know, man. I don't know if it can happen in 6 months or a year, but Microsoft's the only overhanging fruit here. That it does look like. I would actually believe that, yeah, Sam Altman would be a great successor to Tim Cook with John Ivey there in hardware. And they're not really a company that needs to worry too much about, cash flows and all of that. They have an ecosystem that no one's leaving. They could be last to AI, but no one's leaving their iPhones at this moment, at least, is what I'm saying. All right. Right now, I don't like the chart. I agree with this story. That's true. That's because it's been selling off at 215 all throughout and could potentially head back to 200, right? Still in the cards. And you also have an administration that hates the company for some reason or the other. They just don't like Apple. They asked Apple last time, leave China. They went to Vietnam and India. Now they're like, no, get back to America. I'm like, dude, you guys need to make up your mind someday. It's not so easy for them to just jump ship at all points of time, but I guess it is what it is. Yeah, the chart doesn't look that great, but you know what? On the flip side, the only way that Sean says we could pull a Jane Street move to make money. That's true. Buddy, we're already on the street, so I don't think we can be Jane Street for sure. You need that kind of money, but you could. Yeah. Anyways, my point necessarily being about this is that I would expect this to be. This might be better now. I would expect this to be more of a move, man. More of a move, at least for Apple to actually come in and try making some money. If they could get Sam Altman to make a deal, right, the chart would flip in a day. You would see a 7% move on Apple coming through or an 8% move on Apple coming through, and then by then the price would already move substantially. Look at SoFi, man. I mean, it's just like flying all the way. $19.86. The bloody thing was at $8 exactly 2 months back. 8 to 20. What a bloody move. This is incredible. 3.5% up yesterday, 3.27 up now. Okay, I think we're onto this Jane Street thing. Maybe we got to do something about it. SoFi was so beautiful, yeah. 19.88. And the guy was great also. Anthony Noto. I mean, he still is. Phenomenal guy running the company there. So that's doing well. I actually think that stock might even go to about 30, 35. It's pretty strong. You get any pullback there, you should be buying, right? Maybe even 6 month options. You don't need to go out and buy far dated out. But I remember looking at this at a year back and the option used to trade at $1. Let me actually screw your minds up and tell you what exactly the option trades at now. It used to be a 16th January 2026 $15 call is what I used to look at. I don't hold it anymore. Uh, it's almost $6. So $1.30 to $6 is what it's moved in about a year. That's about 4x on your money. So that's that. You find great companies and you find good breakouts, you can make a lot of money. You guys know anything about this quantum computing stuff that's going on? I'm not really sure if any of that actually makes any sense to me, but yeah. A says, what do you think of Elon Musk's political party? I think he should stick to making cars, but I don't know, man. There's a lot of drugs around him, and I don't know if there's ketamine talking or what is talking for him, but it's a stupid plan, in all honesty. A lot of people have tried this third independent front, and it never really worked. Maybe he's got the money so he can do it, but it's a story about his. It's a story about, I don't know, the billionaire that decides to want to get more and more power just because he wants it his way, and he wants more amount of say in the White House when it comes to the electric vehicle mandates that he had, basically making more money through that. Yeah, I wouldn't expect it to basically float for that long, but you never know. All right, you generally never know when it comes to a man like Elon. He could pretty much decide on what he wants to do, and even a small dent will go a long way. In I would say it's more positive than negative for the whole market, while it's negative for Tesla. Now I'll explain that. Even if he's able to make a small dent into the November midterms next year, that would be exceedingly powerful for the stock market to rally, because that means that all the current bills, tax cuts, everything that's happened is a stay still and nothing can change because he does not have power in the House and the Senate. That's one. Two. So that's bullish for the equity markets. It's bad for Tesla because his focus is now moving into politics again and moving away from his babies and his companies, which is Tesla, SpaceX, everything else put together that he has, right? He might also be the only guy that can do all these jobs at one time. He might also be the guy who maybe could be deciding the future of the Republican Party. Now, whether that actually happens or doesn't happen, I'm not sure about it. Maybe he could just put on a tweet later and say, okay, you know what, I agree with Trump and it's all over and the stock will be up 10%. So at some stage, I would be a buyer in Tesla just because the noise that's coming with all of this is not really going to be that much of a hassle in terms of the eventual long term game that's playing out. But in the grander scheme of things, I don't think he's going to cause a dent in the Republican Party being renominated. But I do believe that considering that in the Senate they are pretty neck to neck, a single vote here and there, and nothing passes. A deadlock in White House, as stupid as it sounds, a deadlock in White House is the most bullish thing for equity markets. A deadlock in any political environment is the most bullish thing that the market cares about. The market only cares about certainty and uncertainty, and at the moment, uncertainty is the ringleader, especially when it comes to all this tariff nonsense and everything else, right? Mm, the billionaire who wants more power and a say in the White House sounds like Trump. Yeah, he's made a lot, many billions after getting there. So that's that. At least Trump had some charm. That's true. Tikshan says Elon's autism has its own charm. Okay, great. That is phenomenal. That is just Elon's autism. I think it is his ketamine talking, though. I don't think it's anything else. I think he's just on some next level drugs and been that way. Yeah, wage freedom is in the house. Well, charm wars. Yeah, it is. I mean, like Sharik used to say, right? It's daddy and mommy fighting at this moment. So that's still going on. Stock was down about 6.7%, 6.8%. At the moment, stock's up about 1.18% in pre-market. Though all of that can basically get sold off in a minute, right? You need a few more posts and a few more tweets coming out, and that's it. Tweets from Elon and posts from Trump. Each of them have to just come and say how ridiculous each of them are, and that's it. Stock's gonna collapse. Anyways, we got 30 minutes before market opens. We got about 100 points up on the Nasdaq. 102. Yeah, 102 on the Nasdaq. The volatility index is down 4%, which is fascinating considering that you did have new tariff rates coming through, but they haven't really hit the markets incredibly because a lot of it was what April 2nd was, the similar rates, but they haven't really hit that. One of them was used to be at 44. I think Myanmar or someone was at 44 and now it's at 40. I'll get those numbers and we'll talk about it, but nothing really interesting happened in those tariff rates, especially because those countries don't really matter in the grand scheme of things. What matters is India, Japan, China, EU. So China's pretty much got it safe. EU and India, I think, are going to be the next two trade deals that happen this month. India most likely this week. Again, Trump needs a win now with the tariff things, so he's going to get through the India deal because it's a deal that India's already sent out and sent to him and saying just sign it. Japan and South Korea will be tough to deal with. Japan wants to sell more cars in America because they make a lot of money there, and Trump doesn't want a single car coming in there. He wants his. I don't even know how that happens, but Trump wants to sell his SUV cars in Vietnam for some reason. So let's see what happens there. We got FOMC minutes coming out on Thursday. So that's going to be fun to see because in the previous meeting, you did have some amount of dissenting members, and those dissenting members, whether they continued dissenting in terms of whether that actually happened when it comes to them talking about it that way, whether that actually plays out or not. So that would be fun to know that if that happens. Anyways, I think it's safe to say billionaires cause great upset politically. Yes, I would agree with that. So I got a lot of people right now voting in and saying that they do believe it's a great time to buy if Trump's new tariff hurts stocks. At the moment, it's not yet hurt stocks. Stocks were down just a percent. The Russell was down 1.55, so that was a bad day. I think the Nasdaq's pretty much going to recover yesterday's fall and then head higher from there. So I'm not really worried about that move. Trump also says he scheduled Iran talks. Can't imagine doing another strike on Iran. So, okay. So this is what I was reading about, which is why I think the EU trade deal will go through, and that's because the US has offered an agreement to the European Union that would keep a 10% baseline tariff on all EU goods, with some exceptions for sensitive sectors such as aircraft and spirits. So I think that should go through. Doesn't look like that's going to be too much of a problem anymore. And Trump also said that the August 1st deadline is firm, but not 100% certain. How is that firm then? Okay. Anyways, he does say that it's firm, but not 100% certain. So even the August deadline is like a taco thing. It could eventually get changed and the dates could change. So be that as it may. Let's actually go and see if we have any more stuff going on here. Hold up. Netanyahu nominates Trump for the Nobel Peace Prize. Excellent. Trump says he's not happy with Putin at all. He also says more of less final offers on tariffs. So I don't know. Maybe he wants something more, but who knows? So I'm going to actually be looking at Tesla. I'm going to look at Apple because these guys might actually give me some form of a trade for the next 6 months to 9 months to actually see if there is some move that can actually come through for these stocks and potentially take prices higher. So the executive order was passed through extending the tariff deadline to August 1st. What I do believe is at this current rate, the 10 to 12% weighted average tariff that everyone is expecting, that would be between 10 and 12%, you can kiss that goodbye. They're coming in pretty much higher than what most people were expecting: 20, 25, 40, 35, and 32 in some instances. So 40% on Myanmar, 30% on South Africa, 36% on Thailand and Cambodia, 32% on Indonesia, 25% on Japan, South Korea. Let me put this in so you guys can actually see what's going on here, if you guys have not seen it. So the rates on China are 30%. So those are the rates of tariffs that you're currently looking at, right? Myanmar at 40, all the others currently also. It's pretty bad. It's brutal. But they don't really matter because these are smaller economies. Maybe Indonesia, Cambodia, Thailand to a certain extent. It's Japan and South Korea that matter the most. What happens with those would basically change a lot of the game here. But it's all cool for now. We've been going on for about 56. Dikshan says, who do you think will be the biggest trade partner after China? Oh, it is the European Union. No one's coming close. I think Europe still buys. Europe has a bigger trade, other than Canada and Mexico now. I mean, obviously Mexico is the biggest trading partner, but a lot of people have forgotten about the Canada Mexico, right? Like, what's happening about that trade deal? We're not talking about any of that NATO stuff that's going on. I mean, their USMCA trade deal that's currently being talked about. None of that's being talked about. I don't know what's exactly happening when it comes to Canada and Mexico, but I would truly be more interested in what happens with Canada, Mexico, and the EU at this moment. These three are more important. I think the India trade deal is pretty much done and dusted. There's nothing that's going to happen or change in that. But I haven't heard anything about Canada and Mexico. Nothing about USMCA, nothing at all. So, EU is delaying trade across all geographies. That's true. EU is doing that. And that's actually weird because they're like negotiating with China, they're negotiating with all other Asian countries, then they're negotiating with America as well. Then they're like, okay, we're not going to be paying this much. I don't know what's happening. Anyway, Saurav Gupta says, do you trade in CEYPTO? I don't know. I think you mean crypto, but no, buddy, I don't. That is too tough a place for me to trade. I trade only in equities in the US, but yes, that's what I do. Anyways, nice to see you in Saurav. Thanks for the question. He says the world needs to turn its back on USA. I'm not sure that'll happen till the time the dollar is the reserve currency. That would be tough to actually see that happen. Maybe the euro can take its place, but remember, till the time tech in America is the global exporter of services. Let me say that again. Till the time tech in America is the global exporter of services, the dollar's value will remain, or America's value will remain. You know, back in the day, you used to look at which was the world's biggest navy and decide that would be the reserve currency of the world. For a very long time, America's navy used to be the largest pretty much the largest navy in the world, right? Now it is China. So the thing is, the Chinese currency is not fungible. That's the problem. So that's why it's not going to be able to pretty much come in and have this kind of a move that's currently going on, right? Now, that I do expect eventually the dollar will be dethroned. Most countries go through this kind of stuff. Eventually it will happen, but maybe not in my lifetime. So maybe not in the next 70, 80 years, which means I expect to live above 100. Okay. Let me see. Do you have any comments on the surprise? What's that? Reserve Bank of Australia. Yeah, so they actually did not, which was funny. They actually kept their rates the same. Market was expecting I think it was a 0.25 cut that they were expecting. It was a 3.85. They were expecting it to come down to 3.6. and they stuck by at 3.85. So maybe they're following exactly what Powell's book is, which is let's see whether this thing actually gets a little bit more interesting when it comes to inflation. Because if that happens, you might actually see some more issues coming through inflation and global trade. A lot of Australian part of the Australian economy is built on commodity exports, commodities in itself. So let's see how that happens. Let's see the effects of those kind of things that actually come out. So I think there, other than that, you don't have another scenario other than any of that, right? I did remember seeing the Aussie dollar pretty much jumping negative 0.8%, right? So markets went in, repriced all of the rate cuts that were currently going to be happening in the future. Those don't seem to be happening. Bond futures dropped in Australia. That was an effect as well. So it's the surprise element with which the market got affected, right? It's the uncertainty of the hold and stay steady rather than the cut. Now, they have cut before, so it's not like they're not doing that, but it's quite likely that it is important that with inflation that's trimmed, I remember seeing the inflation in Australia that trimmed from positive 3% down to 2.9%. So that is pretty much that's currently happening, and it's entered their targeted band. If you read the Reserve Bank of Australia's minutes, they have a target band that's there, and within that target band, 2 to 3% is their number. So they've stuck at 2.9, right? Now, in that scenario, they should have cut because it's within their numbers. It's like Powell saying, "Oh, you know what? 2% is my number. You have got that number, so you should cut, right?" But that's not happening at this moment. So, but again, when the RBA announcement came in, you did see a lot of the split decision being done in the RBA, right, in the Reserve Bank of Australia. So, pretty much for the first time ever, 6 were in favor of a hold, and 3 wanted to cut. Now, I've not seen that happen in a very long time. 3 people dissenting against a hold. I usually see people dissenting against a cut, but 3 people dissenting against a hold. Now, there is policy indecision within the Reserve Bank of Australia. And I actually do believe the only reason I'm spending this time, and I got a great question here from this gentleman purely of this concept, I do think this is going to start happening even in America. You are going to see a lot of them come through and have dissents in the Fed as well. You've seen Christopher Waller do that. You've seen Michelle Bowman do that. Few more people will come in and start saying, guys, maybe it's time to cut. And my belief is that you are going to be seeing possibly a September jumbo cut, 50 basis points, if you don't see a July cut. The market's not talking about it today is because it believes that the economy is stronger, unemployment is down to 4.1. Why does the Fed need to cut? The Fed needs to cut because it needs to revive a real estate market that is pretty much at a standstill. It's not that Powell doesn't know that, right? He also doesn't want to be looking like Trump's asked him to cut, so he's cutting, right? He doesn't want to go down that. He's got a pretty much 10 months left on his page and then he's off. He could stay on the board, but I don't think that's going to happen. But to basically just come to the whole Reserve Bank of Australia and close that topic is I think it's a game of timing and not direction. I think that's what they said in their statement as well. I read it this morning. Easing cycle that I still do believe is expected. And I would say that I would still expect a cut in August. It is going to come through. Once you see Q2's inflation data, labor data coming in for Australia, you will see that cut come through. Maybe they're just waiting to see the tariff effect. It's the same reasoning with what Powell is currently doing. He's expecting the same, waiting to see if something cracks. Then he will come in and do jumbo cuts. Now, at the moment, that doesn't seem like that's going to be the case, right? Okay, guys, we got some news here. Goldman Sachs has hired a former UK, has hired Rishi Sunak as a potential advisor. Dude, Goldman's just doing Goldman stuff. Literally, Goldman's doing Goldman stuff. It says, mate, you're the smartest person on YouTube commenting. This is a solid response. The only thing I ask you is go subscribe and join in for every live before the market opens, and we will talk more. This is, I can breathe and talk about this all day long. So it's fun to do this with you guys. To add to that, residential real estate prices are going up. Now, I'll tell you one thing about residential real estate prices. The reason residential real estate prices in Australia as well as in America are going up and globally One was inflation over the past 4 years has caused real estate to move up. Remember, whenever inflation comes in, real estate does well. Two, on the other hand, please do remember, inflation going higher means cost of building a house is too expensive. So supply remains constrained, demand remains the same. If supply does not increase with the demand increase, because everybody, people get house fever. They look at a house, they're like, wow, I want to buy this, I want to buy this, I want to buy this. Now, because they keep thinking that way, they go in to find ways to buy that goddamn place, that real estate. There are only a fixated number of sellers. Now, you're not going to get a large amount of sellers come through on this kind of a market if you're not getting, if you always keep seeing prices go higher and you don't see the mortgage rates go lower, the demand that's there will always come because real estate is a safe asset in people's imagination. So they believe that till the time we see leakages, but anyways, or squatters. But in the larger scheme of things, residential real estate prices keep going up. One, because of the inflation in this world. Two, because you have seen mortgage rates not come lower, sellers or builders not building more inventory, and demand keeps going up because prices keep increasing. So you'll see a lot more flippers. Look at the Middle East. It's the same story. A lot of people are buying there purely because of this thing saying, if it's 5 years or 3 years to hand over and I could buy it today, I could flip it and all of that. You'll see a lot more people entering. It's like a casino when, if they start opening doors to casinos to even people that you can just keep coming in and buying and playing, and they don't stop people from doing it, eventually there's going to be a craze that eventually leads to prices going high. It's the same story in real estate. And luckily, this time, I'll tell you one thing, that compared to 2008, we have a lot better features in the real estate market. We don't have ninja loans, no income, no job application loans, because of which I do believe that markets are priced to not have a real estate shock. The problem is you can't have a real estate shock if real estate construction and real estate production is at a standstill. If real estate production and construction spikes, you will see a real estate shock come through if there are more buyers being given homes at less qualifying abilities. Now, that's not happening. So it does look like residential real estate would eventually sustain itself, may not keep going up the way it is, but you know what? Things can remain overbought and oversold far longer than we can imagine. Okay, so we got that. Let me just see if there's any more news and then we can be out of here. Mm. Melbourne and Victoria seems to have cracked that. Yeah. And I mean, look at America as well, right? Places have been going up like crazy. Places like Idaho and all of that, who pretty much would never have seen rallies, have 2020 to 2025, you've seen things go completely out of whack, right? Look at Canada. Canada is some of the craziest stuff. $1 million parking lots. I mean, there's nothing more that I can say about that. It's just insane. That's the fun fact, right? There's this concept that I'm not a fan of, or I mean, not like I hate him or love him, but John D. Rockefeller used to say this, that if your only goal is to become rich, you'll never achieve it. So make sure that you don't just jump into the next bandwagon when it keeps coming to real estate. Anyway, says I'm going to head to bed, but you myself, perfect, man. Thank you so much. Appreciate you coming in with your questions. Anyways, guys, so let's also call it a day. Markets are going to open and in about 10 minutes, and it doesn't look like there's anything fun. So we're not going to stay for open and keep wasting everyone's time. But we pretty much covered a lot. We're also, let's see if we do a post market live. If not, you should just come in, make sure you like, subscribe, and get that notification thing done. So you'll basically see whenever I do come live. Else, we're going to meet tomorrow at the same time, pre market, before live, 45 minutes before live. So make sure all of you guys subscribe. Let me just go ahead and see what's happening with the poll. 50% of the people still do believe that Trump's new tariffs hurt stocks, but it is a great time to buy. So a lot of people do expect it to be that way. 40% of the people think that there is going to be a big drop incoming, and 10% of them say no major impact. To end it, my belief is that it is a great time to buy. So if you do see a fall, go out and buy great quality companies and let them compound. Anyways, appreciate everyone joining in. Have a good day. Hopefully we all make some money. Take care of yourselves. Enjoy. Join in for the same live again. Thank you.